Welcome to the Context Minute, where we break down the big ideas behind the headlines.
So let's just dive right in with a question. What if your credit card interest rate, no matter what, could not go above 10%? A pretty wild idea, right? Well, a surprise proposal is sparking a massive debate about just that, and it could affect your wallet, your access to credit, and really the entire banking industry.
Over the next few minutes, we're going to break this all down. We'll look at where the proposal came from, the arguments for and against it, how banks are already reacting, and of course, what could happen next in Washington.
So where did this all start? Well, it pretty much began with a single social media post that seemed to catch the entire financial world completely off guard, and it really kicked off a national conversation.
And this whole story moved incredibly fast. I mean, look at this. On January 9th, the president calls for the cap. Just 3 days later, the banking industry formally opposes it. After an initial deadline passes, the push shifts from just demanding banks do it to calling on Congress to make it the law of the land.
Now, to really get why this is such a huge deal, you have to understand the context. A 10% cap isn't just a small tweak. Right now, the average credit card rate is sitting at around 22.5%, so this proposal would literally slash that rate by more than half for the average person, a dramatic change. So, why do so many people support this idea? Well, for them, it really just comes down to two simple things: affordability and fairness.
And the biggest argument in favor of the cap is this number right here, $100 billion. According to a study from Vanderbilt University, capping rates at 10% could save American families a staggering $100 billion every single year.
So for supporters, it's pretty simple. This is about financial relief for ordinary people. They argue that banks would still make plenty of money, they just have to cut back on perks like travel rewards. It's all about stopping what they see as predatory lending. And, it's an idea that has created some very strange political bedfellows.
And believe it or not, this debate isn't entirely new. It's really just a modern take on something called usury laws. The idea of preventing lenders from charging crazy high interest rates has actually been around for centuries.
But on the other side of this, the financial industry is sounding a major alarm, warning that this well-intentioned idea could have, disastrous consequences. And the language from top bank leaders has been incredibly strong. The CEO of J.P. Morgan Chase, Jamie Dimon, he did not mince words. He called the proposal a potential economic disaster.
So here's the core of their argument. Banks say they charge higher interest rates to cover the higher risk of lending to some people. If you legally cap that interest rate, they say they'll just have to stop lending to those higher risk groups altogether. We're talking about the 47 million Americans with lower or subprime credit scores.
And they predict this whole chain reaction. It's not just about losing a credit card. They fear people will be forced into even riskier debt, like payday loans. Small businesses could lose customers, and the whole economy could slow down as a result.
Okay, so with all this public fighting, how are banks actually reacting behind the scenes? Well, it's a pretty fascinating mix of public opposition and private planning. So while their CEOs are on TV warning of disaster, some companies are quietly developing what's been called a trump card strategy. They're creating these new, very limited promotional cards that meet that 10% number. It's likely a way to avoid political heat without actually changing their main business.
And this is the crucial point. We are not seeing widespread rate cuts on the cards that millions of people already have in their wallets. No. These are targeted, new products, probably for customers with really good credit, designed to act as kind of a political olive branch.
But at the end of the day, for a national rate cap to become real, it can't just be a demand on social media. It has to become a law. And that means a huge fight in Congress.
Yeah, after that initial push, pretty much everyone agrees now the president can't do this alone. A mandatory, nationwide cap on interest rates has to come from an act of Congress to be legally binding.
And what's interesting is that bills to do exactly this already exist. And look at this. You've got the surprising bipartisan team of Senators Sanders and Hawley on the Senate bill. But as you can see, both of these efforts are currently stuck in committee, which just goes to show you how tough this path really is.
And this quote from the House Speaker really shows the challenge ahead. Even with the presidential push, key leaders in his own party have basically signaled they are not on board, which suggests a very, very tough uphill battle in Congress. So this whole huge debate really boils down to one fundamental question, doesn't it? Is this cap a vital protection for consumers who are drowning in debt, or is it a dangerous government price control that's going to end up doing more harm than good? You've got two completely different visions for the future here. Supporters see a $100 billion relief package for families.
Opponents see a policy that will cut off credit for millions who need it the most. That's the big picture on the credit card cap debate. Thanks for watching the Context Minute.